Well, hi, friends. This is Senior Pink Cadillac Sales Director Dawn Wilson. And I decided to film this video because I get asked for tax tips from Mary Kay consultants all the time. And I just thought I'm just going to do a training, make a video so that not only my unit can use it, but the rest of the Mary Kay world as well, if it serves you. So I'm going to try and keep things really simple for you to be able to understand and just help you with some record keeping tips and things you just want to keep in mind as you are filing your taxes for your Mary Kay business. Try to keep the record keeping really simple. You know, Mary Kay is a people business, right? We like being in front of people, not in front of paper. But we do have to realize it is a business and there is a little bit of paperwork to do. But if you keep track of your receipts and file them every month and keep track of your sales, tax time is super easy. And I've put together a really easy tax form that I will link for you too. If you're keeping your records, you just add it up and put it on this form and you can do your taxes. Okay, so first off, who needs to do taxes for their Mary Kay business? If you are in business to make a profit, you will want to file your taxes with Mary Kay. And this is combined with, for those of you that are consultants, it goes in with your personal taxes. You're just filling out a Schedule C. It's not separate business taxes or anything like that. But if you're in business to make a profit, even if it's a little profit. Now, if you are just doing this for hobby or personal use, you can turn me off. You don't need to watch this video. But for the rest of you, you'll want to watch and take some notes. If you got a 1099 form from Mary Kay, you need to do your taxes because they have reported your income to the IRS. So you can also all print out an income advisory statement. It's found in the reports on Mary Kay In Touch, and that's going to give you a breakdown of any commissions that you earn, prizes that you won, wholesale order purchases. Like everything is on that advisory to just kind of check off and make sure you have that information correct in your records. I also want to mention, beginning this year, if you use ProPay for your business to process credit cards, you now get a 1099K form from them as well. Now, they're not going to mail it to you. You've got to print it out. So you just go into your ProPay account and look under reports and then tax info. And then you'll see the year and you can print that out. You can also print out the report for your sales for the year of everything that you process through ProPay. So you want to do that as well. Now, you'll give this form from ProPay to your tax advisor, but you do want to make sure that you let them know if you have already included those sales in with the sales that you are reporting, like on your weekly accomplishment sheet, that kind of thing, which is what most of us do. You want to make sure you let him know that you've already counted that in your sales. Otherwise, he's going to report that too, and then it's in there twice. Okay, so just report that once. Either don't put it in with your sales and use this form, or just let them know that you already put that in your sales. Okay, I hope that you all did a year-end inventory on December 31st. If not, you better get to that. It's just going to get harder. So now, some of you do use inventory software like Boulevard or some of those other ones there, and that's okay. That's a real helpful tool. However, you want to still make sure that you take a physical count of your inventory every year end. Things that you don't have to count. Expired product. Throw it away, but keep a record of what you threw away. You want to keep a record of everything that leaves your shelf. Products that you can't sell. Maybe it was discontinued items and you have one of, a mismatch of things that you just don't think you're going to sell. You could donate those to a nonprofit, like women's shelters love that kind of stuff. You could really bless people with those things. You can donate it and get a receipt. And then that will count as a tax deduction, but also, again, showing where that product went off of your shelf. Or set it aside and just use that as prizes, giveaways, that kind of thing. But you're not going to deduct that on this year's taxes because you didn't count it in your inventory. So I'll use those all the time in little baskets of like grab bags of gifts that people can pick at my parties and that kind of stuff. For your personal use of products, you need to keep track of that. And I do suggest that you reimburse your business whenever you pull products off of your shelf, that you pay your business the wholesale cost plus the tax from your personal account into your business account. So you're covering the cost of those items, but you do need to keep track of them. There's a number of ways. I have a spiral. I just keep it on a page of notebook paper. Every time I pull something off, I just write it down. Other consultants, I know they just tear off the box top and they put it in a Ziploc bag and then they total it up at the end of the year. Any way that you choose to do that, just make sure that you are keeping track of that. It is actually better to pull product off of your shelf for a demo item than it is for personal use. So I have a second sheet of paper that I use for my items for demos. And I'll tell you what I do that works really good is when my demos are starting to get a little low, like my eye makeup remover is more than half gone, I will pull that out of my bag and I will begin using it for personal use, and I'll pull a brand one new off of the shelf and put it in my demos. So that way, most of the things that I use can be for demos. And I'm just, using the tail end of products for my own personal use. Now, of course, anything that you're touching to your face, like a mascara, lip color, of course, that can't be a demo. So you're gonna pull those for personal use. Okay, let's see. Items that you use for gifts. The IRS actually limits us to $50 retail for a gift, and you just want to record those separately. You're not, again, recording that as a sale. You're just recording you're pulling those items off and giving them as gifts. I do write up a sales ticket for that and write gift on it. A lot of times I've given more than $50 retail to a person. I just keep track of that. If the day were ever come that I was audited, I'd go back and correct those and maybe have more people that I gave gifts to, So again, just be keeping track of the product that you do gift to people. And that would be gifting like, birthday gift to a family member, child, something like that. Okay. Keep track of your hostess credits and discounts. Anytime that you are, giving product away, you want to make sure that you are recording that. So hostess credit, discounts and things, that should be easy if you're doing weekly accomplishment sheets. I'm going to put a plug in for that because I don't know why you guys don't do them. I can't stress the importance of filling out a weekly accomplishment sheet. It's not that hard and it doesn't take that much time. So you should be doing it every week, but at least every single month, and having that done because it makes tax time so easily. You've already got a record of all your sales, your product that you've given away. It's all in there. So it keeps you caught up. So then it's not taking you forever to get that information collected this time of year. But you're also getting recognitions and prizes for that too. Like, why wouldn't you want that? So I just want you to make a resolution this year that you are going to do your weekly accomplishment sheets, and give yourself a little bit of accountability too. So you know where you are, because you know what? Probably end up selling more when you're tracking your sales. A track number grows. So just please do that for yourself and for your sales director, okay? Next, when you are recording your sales, it's what you sold, okay? It's what you sold. The money that you collected. If you sold something and maybe she got let's say it was a $30 item, but she got $5 off. The sale was $25, right? And then the $5 was product given away at retail. That's how you account for that. If you are using, again, like inventory software, just double check that, because many times that software will include like your personal use, your hostess credits, all that. It's going in as products sold. Any product that leaves your shelf, it records it as products sold. So you just want to double check on that so that so your income doesn't look inflated. Okay. And make sure you're using sales tickets, whether you're printing it out, that you're doing it online, print out a copy for yourself for your records, or if you're using the paper copy, that top copy is your record. That's the legal receipt, and you want to save those. Okay. So have that, because that is important. The other thing too, if you charge postage, you include that in your sales. I double checked with my accountant on that this year, and he said, yeah, just if you're charging postage, that counts as part of your sales. So you can record that that way too. Right. Next, I told you it was a lot of information, so I hope you're taking notes or you can watch back. If you pay with cash, please make sure that you get a receipt, right? And if you can't get a receipt, write a receipt so that you know where that cash went, because I guarantee you at the end of the year, you're not going to remember. So always get a receipt for everything. If you are using digital wallets like Venmo, Cash App, PayPal, all those kind of things, you might get a 1099-K from them this year, although I don't know that they're required to do it when I'm filming this video, but I'm sure it's coming in the future. But what you need to do is you need to document what deposits were for your Mary Kay, especially if you use those accounts, as most of us do, for both personal and allowing customers to pay us on those. So you can print it out every month. I use Venmo, so I just go to Venmo on my computer, I pull up the month, I print out all the transactions, and I go through and I highlight anything that was for Mary Kay. So the deposits that were for Mary Kay, and then any expenses that I had that maybe I used Venmo to pay with something. When you are paying with Venmo for something, again, it's the same as cash, get a receipt so you can just substantiate that purchase, right? But that's really important, because those companies are cracking down on people using those services for business. So you want to be able to prove, so it's not all counted as business. You want to be able to prove what is and not, and just by keeping records for that. As far as taking a profit every year, the IRS wants to see you making a profit 3 out of 5 years. And it can be a little profit. It doesn't have to be huge. It can just be, crossing the line that you're, in the positive. That's fine. And that keeps them happy. But if you're not showing a profit, your business could then not be considered a business anymore, and they'll consider it a hobby or non-existent. And so you just want to make sure that you're keeping records, and that is what's happening. The other thing people ask me all the time, like, how long should I keep my records for? 7 years. 7 years is what the IRS recommends, what my accountant has always told me. So just keep track of those. I encourage, I forgot to pull it out before I started the video, but what I recommend you do, and what I have done for years and years and years, is get an accordion file, like those expanding files. And that's what you're going to use to keep your receipts in. And I have a great organizational handout that I will link to. I have it sitting right here. Okay, I will link this to and tell you how I keep all my records, but I just have tabs on those pockets of the accordion file. So if you're going to get a file that has like 20 pockets to it, and so one is for your car, and one is for business expenses, and one is for inventory. Okay, so you have all those titled. So when you get receipts in, you just file them in that accordion file all year long. Now, if you're a really organized person and you're keeping track of your income and expenses monthly, you can do that monthly. I know most of you guys, and we're lucky if you do it once a year. So if you want to wait till tax time, that's fine. You just add up each pocket in that accordion file. It will correspond to the tax form that I have created. So you just total it up, you put the amounts on here, and then this is all you need to do your taxes. I've made it so simple. Accountants love me, and they love my tax form. So that's all you're going to have to do. So all receipts, you file them in that accordion file. So then once I've transferred everything over to my tax form, I write the year on the accordion file, put a big rubber band around it, and it gets filed away with all the other years. If I was ever audited, I have it all right there. I can just take it and dump it out or whatever they want to do with it, but you've got it all in one place. So you have to go back and look something up. I know that we have had to do that before, and you know right where it is. So that's what I encourage you on how to keep your records. Okay. You also want to record everything in your date book, like all activity that you're doing, because that will substantiate your mileage. It will substantiate your in-home office expense. So if you're doing phone calls or holding appointments in your home, all that kind of stuff, your date book is going to coincide with the other records that you keep. And got ahead of myself. Okay. And again, back to that tax form and your accordion file and all that. All of the expenses that I have on there are legitimate. I swear to you, I've done this for many, many, many years. In filming this video, it's my 36th year in Mary Kay. And I work with an accountant. These are all deductions that you're allowed to take. Don't let anyone tell you otherwise. If they do, call me or call your director, and we'll set them straight. It's just because they don't understand it. That's why I encourage you, if you're having someone do your taxes, find a tax person that's familiar with small businesses, specifically direct sales, because we're just different than other businesses, and accountants don't know everything. So you want to find someone that is good with what you do. So they're going to make sure that your records are correct and things are recorded properly. Don't go to H&R Block. So you want to go to someone that understands small business. Or if you're using your own tax software, those are good. I did that for a number of years in my beginning years in Mary Kay as a beauty consultant and a new director, because they didn't have as many expenses. That is fine. Just kind of follow my advice on here, and you'll be good. It does talk you through things on that. You will be doing a Schedule C, it's called the Profit and Loss Schedule C, along with your personal taxes. That's the Schedule C is about your Mary Kay business. So if your husband's doing them, that's what you want to check out if this is your first year. Okay. Some other tips for you. You can take a home office deduction if your office is in your home, which most of you it is. It just needs to be an exclusive space, which means it doesn't have to be a whole room or anything like that. It can be a corner of a room that you have your desk or your shelves for your inventory, or a closet. You just measure off the square footage of that space. It just needs to be for your business only is what it's supposed to be for. So if you are holding, for example, skincare classes on your dining room table, and you also use that to eat on, that's not exclusive use. So in that case, you couldn't write that space off. Okay. But maybe you have a little, place set up in your home where you hold your appointments and things like that, then yes, all that space is deductible. And that can be a really big deduction. So like I said, it doesn't have to be a room. It just has to be a space that you're using for business only. And I tried to go through like questions that people always ask me. I always get asked, what's the difference between office expenses and supplies? Office expenses is things like paper, stamps, paper clips, things that you're using to run your business. Where supplies are things like washcloths, cotton balls, your starter kit, things that you use to conduct business. Okay. Now, bottom line, it really doesn't matter. If you mess up and a receipt goes in office expenses and not in supplies, it's not the end of the world. If you're keeping all your receipts together, they're all deducted the same way. They count the same. So don't get real caught up in that. Just know where you put it. Okay. Just know where that specific expense, what it's titled under. Okay. Now, you should pay for your business expenses out of your Mary Kay account. I hope you all have a separate account set up for your Mary Kay business. It can be a personal checking account. It does not have to be a business account. But you do want to keep those monies separate, that you're not intermingling your Mary Kay and your personal funds, because then you have no clue how much money you're making, what expenses are. It opens things up to if you were ever audited, not that that happens a lot, but it could. If you were, then it exposes all your personal finances as well. So it's just important to keep those things separately. It's just good business practice. Plus, you'll also know how much you're making and how much you're spending, like when your husband asks you, right? So you should pay for those business expenses out of that Mary Kay account. Okay, not your personal account. And personal expenses come out of your personal account, not your Mary Kay account. And I don't care if you don't have money in your personal account, you're not embezzling funds from your Mary Kay account to pay them. Now, you could pay yourself a paycheck, and that is what I encourage you to do when you're taking a profit from your business and writing yourself a paycheck from your Mary Kay account into your personal account. If you don't want to write a check and just doing a transfer of funds, but labeling it as such, paycheck, so that you prove where those funds went. Again, that's good business practice, but also for you, so that you see that you're really making money in this. And then that paycheck is going to pay bills. It also really helps to show husbands that this is how much money I made this week. I put into our family account, and these are the bills that I paid with it. It speaks volumes. Trust me. Okay. So just keep those things separate, both the income and the expenses. And anything that you could buy that you can justify for your business, you can write off. So things like your computer, your printer, magazine subscriptions, a new cell phone, like all of those things that you might be buying anyway, but now they can be used for business. Make them business, and they can be a business deduction. Your first year in business, you can even write off things like a desk, shelves, table, things that you already have, but now you're converting to business use. You just need to write yourself a receipt for it, estimate the cost, don't inflate it, and you don't even have to pay yourself for it. You just need to like write the receipt. And that's something you can give to your tax person and he'll figure out the rest for you. But isn't that cool? Like, you get to write off stuff you already have. Oh, okay. This is really important. Make sure that your husbands, parents, anyone understand that it is okay to show a loss in your business. It's actually expected your first couple of years. All businesses have loss. That's business, okay? That doesn't mean that you're not making money. You see, we get to write off a lot of expenses that we've always been paying, but now they can be considered a business expense. For example, like your phone, the internet, all that. So now you're getting to deduct it on your taxes, so it's going to help to show a loss, or at least make your income smaller. But that, again, like I said, doesn't mean you're not making money, because you were paying for that stuff before, right? Now it just becomes a business deduction. So sometimes they just need to be reminded of that, because they don't quite understand. They're just like, see, I lost money again. Say, that's a good thing. Okay, on the tax form, I tried to write after many of the categories, like what goes into those categories to kind of help you out with that. So it's pretty self-explanatory, but there's a couple on here I do get questions on. One is interest. You can deduct interest on a credit card or a loan as long as it is only used for your business. So if you did that to maybe purchase your initial inventory, or go to seminar in Dallas, or things like that, as long as it's all business expenses, if you have interest on there, it is tax deductible. If you use it for personal as well, it is not. Right? So that's another good reason of why having a card that you only use for your business is a good idea. Labor, if you're wondering, like, what would labor be considered? That could be a babysitter or office help that you hire, anybody that you're having coming in and doing things for you. So for example, you can write a babysitter off if you got the babysitter so you can go out and hold a skincare class, or you need to work and make phone calls or something, and you know she's watching the kids. So just keep track of what you pay them. Again, I would say it would be better to pay them by check than by cash, but some do prefer cash. So again, write a receipt for that. And as long as you don't pay someone over $500 a year, you are not required to file anything else. It's like under the threshold. So I kind of space my help out when I have people come in. So I'm paying them less than $500 a year. That way they're never considered an employee, and you don't have to do all that other stuff. That's the other reason why I use a lot of virtual help. So my office assistant is virtual. So she can work a lot of hours and I can pay her a lot of money, but since she's not working here, she's not considered an employee. So another reason for that. So for most of you, if you're a consultant watching this, you don't need virtual help right now, but kind of file that away for later. Professional service, that's on one of the lines here. That is work done outside of your office. So like your accountant, that would be professional service. So that's where you would put what you paid them. For your phone and your internet, actually for your phone, let me do that first. You just estimate your percent that you use your phone for business. And for most of us, it's probably pretty high. We probably use our phone more for business than we do personal. So just estimate that, and then you can take that percentage of what you pay for your phone. For your internet, that is actually 100% deductible, because we have to have the internet to work, right? So you get to write that off 100%, even though you do use it for personal as well. Charitable expenses. That can be cash or product. Just again, keep track of what you donated and get a receipt for everything. so that you have that and can deduct that. Non-recovered tax. Non-recovered tax is anytime we sell something and we don't recoup the tax on that, because we pay taxes on the retail value of a product when you order them from Mary Kay, and then is our responsibility to collect that from the customer at the time of sale. But sometimes we don't get all of it back. So for example, we might be selling in a state that has a different sales tax than we do. It might be lower, so you can't charge more sales tax. You have to charge the sales tax in the state you sell. So that might be an instance where you didn't get all the sales tax back. We have a state near me, the state of Delaware, they have 0% sales tax. So I pay 6% in Pennsylvania. So I lose that when I sell in Delaware. Or when you're giving hostess credit, she's getting $50 free, and then you're not going to turn around and say, oh, and you owe me $3 tax for that, right? So that tax is non-recovered. So you keep track of that throughout the year. There's a place on your weekly accomplishment sheet to do that. Total it up in the end of the year, and that goes on that line. So it does become a tax deduction. Okay. I lost my place. Let me find myself here. How to make yourself audit proof. I took a class years ago and got some great suggestions on that. One is to take pictures of yourself doing business, which is pretty easy nowadays in this whole selfie generation, right? Have pictures of you working in your office, when you're doing your open house, when you're at a company event, things like that. It just substantiates your business. And like I said, it makes you audit proof. It's proof that, hey, I was here and I did this. I also always take a picture of my inventory at the end of the year. Once I've done my year-end inventory. And that's just for insurance reasons, like to show yes, I really did have this much product on my shelf. So I always do that. And then it's time-stamped on my phone. Taking a picture of your odometer at the end of the year to show what actual mileage is another good proof of that. Speaking of mileage, you want to be keeping a mileage log in your car. You can get those off of Amazon, Staples, something like that, or even if it's just a little calendar or notebook that you keep in your car. But it's important that every time you get in that car, you keep track of the mileage when you're doing business, because that is a huge tax deduction for us at the end of the year. You do need to write the actual odometer reading. You can't just write, I drove 17 miles to a skincare class. You've got to write the odometer, how many miles you drove and what you did. So sometimes mine might just be like Mary Kay errands. I had to run to the office supply store and the post office and the bank. Or I might write deliveries. Or I might write when I'm going to an appointment or a workshop or something. So just make sure you write that and the miles that you drove. Now, here's a tip. Every time you get in that car, when you're going to the grocery store or the dry cleaners or the vet, wherever, do something business on the way so you get to write those miles off. Make sure you're stopping at a customer's house along the way to deliver product. Make sure you're giving your business card and warm chatting when you're at the grocery store. So make every opportunity a business opportunity, and then all your mileage becomes deductible. Like I said, that's a big tax deduction at the end of the year. Okay. Another tip. These are just some little added bonuses for you. How to turn a vacation into a tax deduction. Can do it by selling $50 a day or $250 a week. Then it can count as a business trip, or recruiting someone. I don't know, when you go away, if you can, why not? And then you can turn that into a business expense. So, but that's a nice little tip. And then finally, I meant to mention this under when I was talking about the labor and the wages. Did you know if you hire your kids, like kids under 18, that you pay zero income tax on earnings of $4,550 a year. So you can take your income and you're paying your kids to like work in your office, whatever, and then you're not paying any taxes on that money. And then you can make it even better if you're not actually giving them the money, but you're taking that money and putting into like a college savings account or something like that. It's like really smart use of your money. So again, talk to your tax advisor about that, but that's like a sweet little thing that you can do in helping to save money and for your kids and not getting taxed on your income. So nice tip there. So I want to keep it under a half an hour. I went to 35 minutes, but hope that these tips helped you guys. I will link the organizational handout and the tax tip handout for you so that you can print those out and use those. And those of you in my unit, if you have any questions, don't hesitate to reach out to me. When you're doing your taxes, or if your tax advisor has questions, I'm more than willing to answer those, just not on tax day. What is that? April 15th, April 17th, whatever day that is. Don't call me that day. But before that time, I'm more than willing to. Those of you who don't know me or you're not in my unit, you can leave a comment, and if I see them, I will answer you back. But a lot of times just going back and asking your Mary Kay director or your tax advisor, and they'll be able to help you with that problem or question. Okay. So thanks for taking the time to educate yourself and for watching, and good luck doing your taxes. I know you'll do great. It's easy when you keep good records. I promise you. So if you didn't keep good records this year, I'm hoping that this encourages you to start right now. So it's way easier next year when you go to do this. So bye for now.